Soho House just went private, and I think this is a big deal. When a company goes private, the rules change. There's far less disclosure, fewer watchdogs, and tighter narrative control. And Soho House, their entire brand thrives on exclusivity and secrecy. Going private lets them protect that mystique, whether it's from member scandals, financial losses, or big strategic moves. After working in publicly traded companies for years, I can tell you transparency changes dramatically when you leave the public market. Let's break down what Soho House gains from this move and why it has a lot of people talking. But before we get into it, here's the intro. Welcome to Revealing the Narc. Join me as I highlight narcissistic traits in celebrities and public figures. Everything here is in my opinion and not professional advice. If you enjoy the analysis, please like and subscribe. Hi, everyone. Thanks for being here. We had a live stream earlier today, and I'm clipping out the most relevant portions of that chat to talk about this new article that just came out. Let's not waste any time and let's get right into it. The live stream clip begins now. This article just came out, and it's about the Soho House. So, Ashton Kutcher's investor group buys club with Meghan Markle ties for $2.7 billion. The Soho House chain has been sold to an investor group. Why do they have the subheadings have the same words as the title? Add a little bit more information. I don't know. So it's additional information here. The private club was a favorite of Meghan Markle. The title says with ties to Meghan Markle. The subheading clarifies that. So this was published, I believe, yesterday. So it's brand new information. The Soho House chain has been acquired for $2.7 billion. The membership-based club company's $2.7 billion deal was spearheaded by MCR Hotels, which ranks as the third largest U.S. hotel group. MCR Hotels' prestigious portfolio features the TWA Hotel at JFK Airport, the Highline Hotel, and the Gramercy Park Hotel in New York City, plus the BT Tower in London. The transaction will take Soho House back into private hands. The upscale club was previously renowned for its private and exclusive nature. So, this is what I want to talk about as we go through this article. We're going to close with the difference between being a public versus a private company and what nefarious companies gain by going private, allegedly. And I just saw someone's comment. I'm going to leave it here. I won't read it out loud, but this is all allegedly. And we all know, we see the same names over and over again, right? I'm not going to read this out loud, but there it is. This is all allegedly. Carol, I'm going to show your comment. This is all allegedly. So, yeah. So there it is. There it is. The article continues and says Meghan Markle and Prince Harry enjoyed their second date. I thought their first date was there too. At the London venue. Soho House revealed the agreement on Monday, August 18, with stockholders set to receive $9 per share in cash. The stock proposal represents nearly 18% above Friday's closing price, but falls short of the $14 per share New York Stock Exchange debut in July 2021, reports the Mirror US. So the stock must be what? If it's 18% higher, was what? About $7, let's say $7.50. And the shareholders were bought out with $9 per share. And that's a big drop, right? From 14, it's almost half from July 2021. And also to think in July 2021, businesses weren't, especially hospitality type businesses, weren't doing that well, right? So for the stock to have been much better in July of 2021, it's kind of, I wouldn't expect it. I wouldn't expect it. I wonder what this means for Marcus Anderson and his role. Carol, too many shenanigans. Kipper, that is very well said. I agree with you. I wouldn't call it a respectable, upstanding establishment. Before we continue, let's highlight Carol's comments. Let's help Royal Daily Tea get to 50K too. She's almost there too. Also, okay, couple of announcements before we get into this public versus private thing. I'm going to have a celebratory live stream on Sunday with special guests at 9 a.m. Because it's my 1 year anniversary. So we're going to do that on Sunday. On Friday, what I think I'll do is have a members chat. And on that members chat, we'll go through some of my earliest clips on that I posted on X that I will have digitally remastered because the technology has gotten a lot better since last year. So the clips that I'm able to get are a lot more clear. And I think after a year of doing this, I've gotten a little bit better about slowing down and zooming in and all of that. So I'll do that on Friday. And then I will post it as a public clip later on that same day. So that's what I have planned so far this week. I would love to go through my top performing YouTube videos and do a little bit of a, I don't know, highlights of the year. Luckily, I didn't start posting on YouTube till September 1st, so I think that one I have time still to create that. And I think I'll have to I'll have to show clips of where we came from and things that have happened because that AI voice was not the best. Let's get into this public versus private and what a nefarious company gains by going private. The first is transparency and disclosure. For a public company, they must file quarterly and annual SEC reports with audited financials, executive pay, lawsuits, and risks. Journalists, analysts, and activists can all dig in. For a private company, there are no SEC filings, only shares info with private investors and lenders. It's much easier to hide losses, debt, or legal problems. Now, I'm going to tell everyone I am not a business expert. These are just what I found online. So please do your own research if you want to confirm that I got the details right. The next is scrutiny and watchdogs. For a public company, they're constantly watched by analysts, media, retail investors, and regulators. There's risk of shareholder lawsuits if misconduct emerges. But for a private company, they're only accountable to a small circle of investors, private equity, and lenders, and there are fewer outside eyes looking for red flags. The next is narrative control. And for a company like Soho House, allegedly, this might be very much in their best interest. For public companies, scandals quickly affect stock price and trigger class action lawsuits. Companies must issue public statements when one of these things happen. However, in private companies, they can manage these crises quietly without being forced to disclose. Reputation damage is slower and easier to contain. Sarah says that this is exactly why a lot of MLMs are privately owned. The next or the next gain for going private has to do with flexibility and speed. For the public, they're bound by shareholder expectations, quarterly earnings pressure, and SEC rules, versus in private companies, there's more freedom to make deals, shift strategy, or cut staff without external pushback. They're able to act faster with less oversight. Regulatory pressure is another difference. In public companies, the SEC monitors for fraud, insider trading, misrepresentation, and there's extra legal exposure. But for private companies, they're still subject to labor laws, taxes, safety rules, etc. But there are fewer disclosure requirements and fewer hooks for regulators and lawyers to pry into governance. And finally, there's the member and customer secrecy, and this is specific to entities like Soho House, allegedly. If this was a public company, there are risks of leaks about member scandals, lawsuits, or financial trouble that investors might demand answers on. And in a private company, there's a brand of exclusivity and secrecy that aligns with being private. They can bury controversies more easily to protect the mystique of the company. So, in short, going private gives a potentially shady company cover, less required transparency, fewer watchdogs, more freedom to maneuver, and tighter control over reputation. The trade off is they lose access to public market funding, but if secrecy and control matter more than raising money, private ownership is ideal. Yeah, so I thought that was all very interesting. I did kind of a dive into what the difference is between public and private companies. This is actually interesting to me right now because I am looking for a new job, and I my history over the last 7 years is I've worked in publicly traded companies. And I want to know also the trade-off for me. What are the benefits of working for a private company versus working for a public company? So just all things to consider. And that's where the clip ends. And when it ended, I really wanted to look into perks of working for a public versus private company because ultimately there are pros and cons to either. Let's talk about job security. Public companies are usually more stable, especially if they're profitable and well established. But there's a catch. When shareholders aren't happy, layoffs can come fast and hard, especially right after quarterly earnings. Private companies can feel less predictable. If they're owned by a private equity or venture capital, decisions can happen quickly and quietly. Sometimes that means growth, but it can also mean sudden restructuring without much warning. Let's talk about pay, bonuses, and stock options. Public companies often offer higher base salaries plus stock options or RSUs. If the company performs well, you get to ride that wave too. Plus, there's usually a bonus structure tied to company performance. Private companies vary a lot more. Startups might offer equity, but established private companies sometimes focus on cash bonuses instead. It's less standardized, so you really have to compare offers carefully. Benefits and perks. At public companies, benefits tend to be comprehensive and standardized. Strong health insurance, 401k matches, tuition reimbursement, wellness programs, the works. Private companies can be hit or miss. Some offer incredible perks to attract talent, especially startups, but others keep benefits lean to manage costs. Transparency and insider knowledge. With public companies, you get access to tons of information. They're required to file with the SEC, so salaries, financials, lawsuits, and risks are all public. You can literally see if a company is thriving or struggling before you accept a job. With private companies, there is way less transparency. You might not know about financial trouble or leadership changes until you're in the middle of them. Work culture and speed. Public companies tend to be more structured and policy driven. Lots of approvals, lots of process. It can feel slower, but there's a safety net in that structure. Private companies, on the other hand, are often more entrepreneurial, sorry, I can't pronounce it, and fast paced. Decisions get made quickly, but if you thrive on stability, that speed can feel chaotic. And finally, career growth. Public companies usually have clear hierarchies and promotion paths, which makes it easier to map out your next steps. Private companies can give you faster growth if they're scaling quickly, but your role may shift constantly as the business evolves. So here's the key takeaway. Public companies give you stability, structure, and transparency, but they can be slower and under constant shareholder pressure. Private companies give you flexibility, creativity, and sometimes faster growth, but they come with more risk and fewer safety nets. Well, everyone, I want to thank you all so much for listening. Please let me know your thoughts on all of this that we discussed. If you have any career advice, please drop those in the comments too, since I am currently on the job market. I can't wait to read what you all have to say. If this was interesting to you, please like and subscribe. Hit that notification bell so you'll know every time I drop a new video. Thank you so much for watching. If you enjoyed this video and you're looking for a meaningful way to support something beyond the screen, I'd love for you to consider making a donation to the National Domestic Violence Hotline in lieu of super chats and super stickers. They provide 24/7 support and resources for people in unsafe or overwhelming situations, whether that's emotional, physical, or just hard to name. Their information is on the screen should you need to contact them, and you'll find the link to donate in the description of this video. Every little bit helps, and it means a lot. Thank you again for watching, and I'll talk to you soon. Bye, everybody.